Good afternoon. It's March 19th. It's Thursday. Uh, and today it's looking like a range day. But if we take a look at the daily chart, it looks like, we're trying to close as a doji because, this is a breakout of this range. So I think that is what could be it. And I'm not sure why I have the highs of the range drawn up here. They should probably be more like uh, this, or really more like this. So I think we're trying to break back into the range. Could get crazy to the upside, but I don't really think it will because I think here's the weekly chart, by the way. I think on the monthly chart we're trying to correct at least back to the EMA. But I do want you to notice that the past few weeks we've gapped down. Okay, and I probably should have pointed that out more recently than today. But so I think, prices are trying to create a bear close again. So be aware of that tomorrow, because tomorrow is the last day of the trading week. So anyway, let's take a look at this range. So the bias is down. Let's take a look at the 17,000 tick chart. So we've been working in this spike and bear channel since March 18th. That's okay, yesterday morning. The bias is down. So what time? Where's 5 o'clock? So in the overnight, we broke above this high, and prices failed to make a measure move. And you can see there's some resistance at what would be the midline, and then we form this channel down. So if you're in here early, I like these two lower highs, I mean. And this one's a little too far from any trend line or EMA. It does come back, goes lower, boom. And now you have a double test. So you can see prices found resistance here once, twice, third time. You could go short here, and then you get a lower high. So I like that. Wouldn't be a bad idea to maybe drop a limit order here, get short. It's two-legged pullback, but I don't think you want to get in below this huge bear bar. Then we get a lower high, again, too far from the trend line in the EMA. And you kind of get like a few pushes down. So you got 1, 2, you could argue this is 3, 4, or you could just argue 1, 2, 3. And then we get a big move up, but it finds resistance at this high. And we go lower, make a new low, and we bounce. That's after the market opens. So it's funny. I wasn't watching at market open, but I was looking at the behavior, and I was like, I wouldn't be surprised if we had a bull trap at the market open, and that's what this is. So up till 7 o'clock, we're trending higher. Uh, I'm not. I wasn't considering going long yet because I thought the bear move was trying to hit 100, make this bar 100 points, 66.95. So we didn't get there. So far, we have 84-point move. And so I wasn't trying to get long here. Um, oh, these are the lows, though. So I think it's reasonable to expect a bounce. That's what I was seeing. Is like, okay, it's probably, come up on the max size of the bar, or at least close to it. It could go much lower, but they're probably going to create a bull trap. That was my thinking. I remember now. So we get a break and then move to a new high, and then we trend down. And I think you could argue for getting short here, or really here. I like that one. Low risk. especially after a strong bull bar like that, you get a doji. I like that to test at least these lows. Come back, we test this low, and then we rock it up, and then we're just flip-flopping like crazy. And you can see we get a little range here, making higher lows, and we break out. Form a double top. I kind of like this one. After this strong bull bar, you get a doji, and then it has a bull body, but it's a doji, and then you get another doji. It's a lower high, plenty of room back to the EMA. I like that one. You can see plenty of computers like that one. Boom, we go all the way down to the low of this range. Mm, maybe when we bounce here, maybe you start considering getting long. That is a higher low, so to me, this looks like a bull channel with an overshoot. But I'm sure some people would argue for that to be the channel. Either way, it doesn't really matter. But overshoot, double top, higher high. We get the break. We're just in no man's land here, but I was really liking getting short after we made this lower high. Or actually after we made this lower high. So, maybe you consider this sort of like a double top. Look, you get one leg up, two leg up, potential two-legged trap. I like this one, and I got in up here, great timing, and I got out right here, great timing, and I didn't even have this range drawn, so thank goodness I, stuck to my rules. Let's draw that channel. Oh, that was a strong move down, and it looked like, here, I'll show you on the 17,000 tick chart. We get this lower high, boom, and then you get this bull doji. I like that. I was getting short in here on this bull doji, and when we got a bear bar, I was like, let me hold on, and then we get another bear bar, which I liked, but I looked at this chart and I didn't like that we were going sideways, and I was already, had a lot of profit, so I got out. Come up here, boom, bounce, higher low. I think you can consider that one after this bear move failed. And I think you can consider, I would say you can consider either of these, this double bottom. Look at that double bottom go. Look at that thing go. That's probably it. Get a breakout pullback right here. You could consider that one, but you're going to want to go for, a measure move, and it gets close, and that's when you got to take profits. If you get this doji, you're so far, you have so much profit that you have to, and you're so close to the target, you have to take profits, and that's why we're just going sideways. It's just profit taking until the bulls give up, and that's where we're at now. So let's have one last good look at it. All right, I hope everyone had a good day. I'll be back tomorrow.